Get ready for Season 3 of the Tron Grand Hackathon 2022 with a total of $1.2 million in prizes across Web3, DeFi, GameFi, NFTs, and the newly added Academy and Ecosystem tracks. The wait is over. Tron Grand Hackathon presented by TronDAO. To learn more, visit trondao.org. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of the blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblockcrypto.com/terms-service. Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block. And today, joining us on the other side of the mic is my guest, Maurizio Bartolomeo, co-founder and chief strategy officer at Lendn. Sir, thanks so much for joining the show.
Great to see you, Frank. There's a bit of history, actually, with Lendn and The Block that we can get into, but very happy to be here again.
Yes, I was actually the executive chairman of the firm for quite some time before stepping down. No, I'm just kidding. I guess, we can check on our site now because I can go back in time in a way that wasn't possible with the old site. But you were telling me that we wrote, Stephen Zeng and I, the first ever article about the firm?
Yes, that was when we announced Canada's first Bitcoin-backed loan back in November 2018. And the article is titled Meet Lendn, Canada's first Bitcoin-backed lender.
That's fantastic. Let's see if I can pull it up. It's hard to search for like old stories from like 2 years ago in Google. They just don't populate. But I'll take your word for it that was the headline. I'm having trouble finding it. So walk us through, for folks who maybe didn't read that article back in 2018, what exactly is the firm? What's its mandate? Assuming a sort of global savings lending firm platform.
Yes. So I can go into a little bit about my background and how that kind of led us to the thesis behind Lendn and the mission or the goal that we're trying to accomplish. But Lendn is a financial services company for Bitcoin and digital asset holders. So we offer savings and loan solutions for people that have Bitcoin or stablecoins, USDC. Mm-hmm. And our flagship product is Bitcoin-backed loans, dollar loans backed by Bitcoin. And we also have our USDC and Bitcoin savings accounts, B2X. Actually, late last year, we announced the world's first Bitcoin mortgage, which is a product that people can use their Bitcoin to buy a house. And most recently, there's a bunch of really cool stuff on the plate for Q4. But effectively today, we do just that. We provide savings and loan solutions to clients in over 130 countries, and we're based in Canada. However, I myself am from Venezuela. A lot of our team is from Latin America. We have a big focus in that part of the world, even though we service, of course, Canadian and U.S. clients. But the lion's share of our business is in Latin America, and we were one of the first lenders to offer the services in Spanish and Portuguese. And I think we have a pretty different take or approach as to how these type of services have been articulated in the market until today. And that's kind of what sets us apart, is this sort of accessibility and ease of use of the products. And we are very, very, out of the lenders that remain, I would consider Lendn to be probably the most conservative one. And we can get into sort of our risk management processes, et cetera, which is coming into the spotlight recently. But that's a little bit about us.
You didn't loan any funds out to Three Arrows Capital?
I think we were the only North American lender that didn't. We did not, no.
Did you feel a little left out?
We felt very happy that our risk management policies or processes were shining bright at a time of darkness, I would say. They did come across our desk several times, but we were never able to get comfortable as others did. And that and a few other very key decisions, and I guess part of it is just built into our DNA. And a lot of it has to do with how Lendn came to be. We didn't come out of the gate with an ICO. We don't have a token. We didn't raise, $100 million off the bat. We did raise over $100 million combined over last year after we were in existence for 3 years. But there's a bit of a culture of excesses, I believe, in some of the companies that got out of the gate with a big bang and frankly, little accountability for that cash. And that just creates strange cultural traits within the company that are not sustainable or great in the long run.
Too much money can breed complacency and a bit of irresponsibility. There's no constraint, so you do not have to act with a degree of discipline.
100%. And I think a great deal of the way we are at Ledn today has to do with the competitive dynamics and the sort of market conditions when we first launched. You know, we launched the business in 2018 as the first bull market was rolling into a bear. And our first raise was $1.5 million, $500,000 worth of equity, $1 million to lend out. And we had to be very, very smart about how we use that equity and conserve it as best as we could. So Ledn has been a very conservative firm from day one because of that's how, the way Adam and I are, you know, both of the co-founders, but also because it was just the way that we felt it was a responsible way to manage the business. And every time we have to make a spending decision at Ledn, one of the things we like to say is, would you still write that check if that was the last $1,000 that we had? And that makes people consider a lot of things that they might not otherwise would, especially when times are quote unquote easy. That's when I think if you're not disciplined in those easy times, that's where you set yourself up for errors. And, you know, we were able to remain disciplined and consistent during the highs and the lows.
We're very judicious here at The Block as well. I wonder if we applied that same practice here, Dean, maybe we wouldn't have bought those lights for the podcast studio yesterday. We were recording in utter darkness. I didn't realize that the lights in this room don't work or don't exist. I mean, I see things on the ceiling that look like lights, but there is no light. Anyway, if we trace ourselves back to the origin story of the firm, I was actually musing with an executive in the space recently about the genesis of many different companies, and they often find themselves or are rooted in a similar personal story where a person is trying to do something or wants to do something and can't. So they find a company to fill that hole. Brian Armstrong tells a similar story about his journey down the crypto rabbit hole. He just couldn't find a simple place to buy Bitcoin. Mike Belshi, who runs Custodian BitGo, tells a similar story where his friends were asking him to store, I hope I'm getting the story right as I recall, store their crypto in wallets under his bed. Is there a similar tale for you? Were you keen to buy a house and had all this Bitcoin and nothing to do with it?
Much humble story, but yes, there is a connection. So I'm originally from Venezuela. That's where I was born and raised. I grew up in double-digit inflation. You know, Venezuela has been in double-digit inflation since 82. I was born in 85. And from there on, it's just gone into the hundreds and thousands and millions. And so in my lifetime, I saw 14 zeros get wiped from the currency. The currency got renamed 3 times. First, it was the Bolivar, then it was the strong Bolivar, then it was the sovereign Bolivar. And that sort of realization, or growing up in a place where money was so broken and being from an entrepreneurial family, I kind of developed a bit of an obsession to understand how money worked and how it didn't work, how places like Venezuela that were so broken could keep the lights on without ever collecting any taxes. So that led me down this sort of rabbit hole of broken money and unfair access to financial services. I saw many rich people in Venezuela borrow bolivares at rates below inflation to buy dollars, and they would just print money. And so that was when the first glimpse of this concept of borrowing an asset that is depreciating at an incredibly fast rate, and you're able to borrow it below the rate at which it is depreciating, and you use that asset to buy a hard asset that is not depreciating. So in the case of Venezuela, this was borrowing bolivares to buy dollars, and that trade worked beautifully. In the United States, an articulation of that trade is a mortgage. You're borrowing dollars, weak dollars, subsidized at a heavily, controlled rate, if nothing else, and you're using that to buy a house that has a much lower stock to flow. And so what ends up happening is the value of your debt basically keeps getting reduced relative to the value of the asset you bought with the debt. And you perpetuate this virtuous cycle by refinancing that asset and buying another one. And so this concept of being able to borrow a weak asset to purchase a hard asset was something that stuck with me. I stayed in Venezuela until I went to do my university. Venezuela was falling apart. Many families chose to send their most willing kid abroad in case things went south. So that was me, and that's how I ended up meeting Adam Reeds, who's the co-founder of Ledn. After I graduated university, I went back home. Country kept falling apart. I made the decision to leave after we lost the 2014 election. my parents decided to stay. And it was my youngest brother actually who starts mining Bitcoin back in 2014 in the midst of horrible capital controls, hyperinflation, etc. And my dad sends me a white paper one night and says, hey, your brother wants to buy these machines. What do you think? They use electricity, which was subsidized, and they produce Bitcoin, which could be sold globally. And so my brother starts mining Bitcoin. And then my whole family started mining Bitcoin. My friends, everybody that found out about this, I saw Bitcoin go.
Your abuelita?
Everybody, my tias, my primas, like the whole shabazz. And when I saw this, I saw how people were rushing to Bitcoin in the absence of dollars, in the absence of euros. And they were basically regaining their financial independence through Bitcoin. And I became enamored of what Bitcoin was doing. I saw my brother trade Bitcoins for Bolivares in the darkest hour, in the most hostile economic conditions I've ever been in Venezuela. And he traded it into Bolivares, which was something you couldn't even do with dollars at the time. And it was that moment, the whole light bulbs went off. When I was in that room with him and he traded that Bitcoin into Bolivares and the money hit my bank account, that's when the potential was so high to help people in these situations. And even though I was no longer living in Venezuela at the time, I really wanted to get involved. I came to Canada and Toronto, and it just so happened that Vitalik was giving his speeches at U of T to basically empty rooms around Ethereum because Ethereum was just getting off the ground. So anyway, I start trying to build a mining facility here in Canada because that's where my family knew what to do back home, and that's kind of how I
got into the space.
Yeah. And ironically, when I was trying to come to Canada, I contacted the Bitcoin embassy that was operating in Montreal. It was actually being run by this guy called Francis Pouliot. And that's how I ended up connecting with Francis, who later became Ledin's first ever borrower. He actually took out Ledin's first ever Bitcoin backed loan. But it was in that process where we were building the mine in Canada. Adam and I did build the mine in Quebec. And as we were trying to grow the mine and find financing for our mine, we were trying to get a loan because we didn't want to keep selling our Bitcoin. That was the biggest problem every miner had.
Where'd you get the loan?
We didn't. We couldn't.
Oh, you didn't?
We couldn't get it. Nobody would finance. Everybody thought we were crazy. And when we went to the banks and financial institutions, they kept telling us, Bitcoin's not an asset. Bitcoin's not an asset. And we thought about this long and hard. And to us, they were wrong. Not only was Bitcoin an asset, it was a great asset to lend against because it trades 24/7, has very deep liquidity. It can be sent from anywhere in the world. And so we got really excited because we thought if we can figure out Bitcoin-backed lending for Canadians, we can take this to the world because for the first time ever, there's now a piece of collateral that is equal, whether you're a Colombian, whether you're a Canadian, whether you're an American. And if we nail this concept in Canada, we're going to be able to take this to the world and treat everybody the same way, which is effectively what we do today and something that makes us incredibly proud. It also is a big reason why Ledin, the platform, if you go into our platform and you play around with it, you'll see that it's very different. It looks and feels very different than most other crypto platforms that you may be used to because people in those parts of the world weren't really getting into it to speculate or to try to, bet on the next token. They were really going in there nervously trying to get rid of their paycheck to convert it into something else that they could feel comfortable about. And so we made the platform be as plain and simple and straightforward and remove all this sort of jargon and complexity from it. And we have excellent customer success. Like that's one of the teams that we're most proud of. And we have glaring reviews. I welcome everybody to go check what people have to say about Ledin. But yeah, I can get overextended, so I'll pause there.
A lot of people don't know the etymology of Venezuela. It actually means Little Venice.
Yeah.
Because of the discovery.
Americo Vespucio.
Yeah, exactly. You know the history well. I was with a bunch of colleagues. They were surprised of the degree to which I'm a student of history and geography. I'm like a Talmudic monk wrapped in an Italian-American exoskeleton, to quote Anthony Scaramucci. So I appreciate the history. And it sounds similar to, again, some of the firms out there that found themselves on the wrong side of a bad trade, so to speak, post the meltdown of Luna, Terra Luna, and Three Arrows Capital. Nobody really knew that everybody was lending to this one firm to the extent that they were. How did you avoid getting wrangled up into that gnarly predicament that hit so many other folks so hard?
Happy to speak to that. So there's a lot of things we do differently at Ledin that kind of made us navigate the series of events differently than most others. I'll kind of run through them. The first one would be the whole Three Arrows situation, right? The way we didn't get affected by Three Arrows was that we have pretty stringent onboarding processes for any institutional counterparty. We need to see financials. We need to talk to the management team. We need to understand their trading strategies. There needs to be a great deal of transparency as to what they're going to do with the assets. And one of the big things that we couldn't get there with for Three Arrows was the fact that they wouldn't provide financials. And so that was a very clear-cut decision for us on that one point in particular. We just couldn't get comfortable because they couldn't meet the requirements. In that sense, we escaped unaffected.
Was there anything in hindsight that seemed to be a red flag in those original engagements that in hindsight you kind of look at and think, oh yeah, that was unusual?
The fact that they wouldn't provide statements was always a red flag because it is a very basic requirement, especially when you're asking to be lent assets in an unsecured manner, even if it's in a secured manner. You need to be able to show some level of transparency. You can't just be based on reputation, which is, I think, what they were banking on greatly. And we have a very experienced risk management team head by John Glover, who has like many decades of experience. And to him, it was a very clear no whenever we didn't get the financials. And so it wasn't even a discussion internally. It was like, they don't tick the boxes. We can't lend to them. We can't take on that risk. But to your point, I found it strange that a group that would, theoretically have many great things to show if you were to share those financials. Like typically you tend to be proud of your financials, right? If you run a tight ship. And so the fact that they weren't sharing those with us, and the fact also that they were based in a sort of non-North American jurisdiction was always also a bit of a concern. So I would say those two things would be the two things I would call out as, didn't really tick the box.
Got it. So you were kind of walking us through your risk management practices before I derailed you with that question.
No worries. So the other thing that we do quite differently is we only support Bitcoin and USDC. We don't support any other assets. Bitcoin and USDC have the sort of deepest liquidity in the lending markets. And because of that, we didn't get into like asset mismatches. Some firms were taking in assets that didn't have demand on the institutional side, and then they would have to convert these assets into another one to generate this yield, which created an asset mismatch. We don't expose any client assets to DeFi. So that was another reason we were able to we're not affected by Luna or Terra or any of this stuff. And the other one is we were the first lender ever to do proof of reserves attestations. So what that means is we have a certified public accountant that comes in every 6 months to Ledn. They look at our assets, at custodians, lenders, exchanges, et cetera. And then they look at our liabilities as reported by the client balances. Every client gets a hashed ID and is able to verify that we reported their balance to the accountant accurately. So that means that we're basically, being honestly representing all of our liabilities to our clients. And we do that every 6 months with our Menino. And I think that is also going back to this concept of conservatism being in our DNA. It was something that we invested in many, many years ago, back before, having proof of reserves was even considered to be cool or interesting. And then most recently, which I think is a testament to our work, we just appointed Deloitte as our external audit partners, which is something we're very proud of. Maybe in TradFi, it's more common to have Deloitte as an auditor call it, but in crypto, I believe we were the first crypto lender they're working with, and that's something we're very proud of.
So what's the state of the crypto credit market as you see it? I imagine that many of the loans you're underwriting maybe sitting behind you, there's wholesalers that you engage with, larger lending firms from which you're sourcing liquidity. Have things gotten more expensive? Is there more friction? There's certainly less activity across the board, but how would you sort of paint a picture of the landscape currently?
So I think overall, I would say the landscape right now feels a lot more balanced. And the reason I say that is because in the run-ups towards the later end of last year, what you had was a lot of firms that were going out to, call it retail or individual clients, offering what I would say are outside market rates because they were in this bit of an arms race to grow their assets on their platform. And because of that, they were basically paying rates that were higher than what high quality institutions on the other side would be taking those assets at. And there was basically effectively a flood of assets that were being lent around, I would say almost very loosely, because there was this impetus from these firms to deploy this cash. Yeah. Otherwise, they would just have to be paying interest or nothing. And that, I think, pushed a lot of these operators to riskier and riskier avenues to deploy that cash, which is how you end up with people racing to the Lunas. You saw firms taking open term deposits that could be withdrawn at any time and use those funds to finance multi-year mining facilities, which was huge mismatch out of the gate. Anybody could have called that out from the beginning. And so what I think is happening today is that you have a lot of that excess that has been essentially, removed from the market forcefully. And right now there is a huge focus on risk management. Everybody is tightening up their covenants. Everybody's trying to, ensure that this does not happen again. And I think that has brought the space to, like I said, a more balanced equilibrium, I would say. And then in terms of the people that we work with today on the institutional side, we like focusing, and especially after the events of the last, 3 months, the entities that perform the best typically were these high quality market makers that take non-directional positions. They are literally arbitraging price discrepancies or dislocations across exchanges. And that is the type of activity that we think is sort of best suited to minimize risk. And those are the parties that we like to work with.
Get ready for Season 3 of the Tron Grand Hackathon 2022. There are a total of $1.2 million in prizes up for grabs in Web3, DeFi, GameFi, NFTs, and the newly added Academy and Ecosystem tracks. So what are you waiting for? Join Tron for an opportunity to showcase your work, win funding for your project, and network with other builders in the community. Tron Grand Hackathon, presented by TronDAO. To learn more, visit trondao.org.
So maybe you can walk us through the rate dynamics that exist. In hindsight, it's clear, and it's always been clear, this has always been a truism, that an interest rate or a yield that you can ascertain is directly correlated with risk. There's no risk-free free lunch, so to speak. How do rates look right now? Are we seeing them? There's probably kind of like a tug and pull between the Fed hiking rates and also the industry sort of being more cautious. We've seen, interest rates come up across different savings account, Wealthfront, and I think Robinhood have kind of started inching back towards, I think, 3%, let's say, percent. What does it look like in crypto? What are the dynamics now that are shaping it, if that makes sense?
Yeah. So
did I describe that? I'm not an expert. I play one on TV.
No worries. This is kind of how I understood it. And maybe you can correct me if I didn't get it right. But basically is, what are the drivers of these rates? Like, what drives these race dynamics? Like, what's the push and the pull that creates the tension that gets to that equilibrium? And to answer that, I think there's a different answer for what is driving USDC rates versus what is driving Bitcoin rates. I think there's a
Maybe
divide.
I can rephrase the question. What sort of shapes the yield you can get on any given crypto asset? Which different dynamics are at play for stablecoin versus Bitcoin, et cetera?
Yes. So a lot of it has to do with the things that you can do with the asset and like what that asset is being put to use for. So in the case of dollars or USDC, they're incredibly versatile because you can use them to finance a whole slew of things. Bitcoin is a bit more different because the borrowers of Bitcoin denominated loans will have I would argue, more limited subset of uses because of the potential changing in the value of the Bitcoin. So what is driving Bitcoin rates today, I think one of the major or the primary drivers of Bitcoin rates today, in the past, it used to be very driven by the basis trade. So the difference between the futures and spot, and because you could basically collateralize that trade in both Bitcoin and USDC, that used to be a big driver of that trade. The first one, the grandfather of them all, was the GBTC arbitrage, which was the cleanest sort of in to arbitrage Bitcoin on Bitcoin. That trade basically died down once all of the ETFs and the Bitcoin funds started popping up elsewhere, and it moved to the basis trade. And so that basis trade started getting compressed very quickly because everybody was, selling future, buying spot, and effectively the curve went flat. And so today, what I think is the main driver of this sort of Bitcoin yield, the bigger borrowers of these Bitcoins are these delta neutral market makers. So basically, the extent to which firms can continue to find dislocations across venues and close those gaps is, I believe, the biggest driver today. And a good way to kind of gauge how that is trending, Skew Analytics actually has a great feature that shows you what the average spread on particular exchanges is depending on different sizes of transactions. So what that means is as more market makers come into the space, you will see that average spread keep coming down and down and down and down and get tighter and tighter and tighter. And it'll get to a point where it will normalize. I'm not sure what that end state will be, but today what you are seeing is that average spread in most exchanges is getting tighter and tighter and tighter and tighter. And I think this is a representation or an expression of how many market makers are now coming in to narrow those gaps.
Understood. So when we think about the state of the crypto credit market, lending market, there are these two forces that I've identified. One is newer entrants or folks with maybe less market share than some of the better known players like a BlockFi or Genesis. They're kind of looking to get a bit more aggressive while the the latter pulls back. And then at the same time, you've seen almost a renaissance or a surge in activity among these decentralized lending platforms where the large institutional players are actually opting to borrow and lend through those platforms than a centralized one. Would you say that's somewhat accurate?
So I would say that every firm takes a view or a stance on how much risk they want to take on to offer a rate that may be attractive for clients. Some firms decide to push all of their efforts into getting the highest possible rate because they feel like that's what's going to drive people out the door. But that comes at a trade-off, right? Whenever you're offering a very high rate, you're typically having to take on more risk on the back. And so while in the past, this concept of having a very high rate was a great tool to drive clients to your platform, I think based on recent events, people are starting to be a lot more discerning about what a high rate means. And it's not necessarily a great thing to have a rate that's above and beyond.
It's like, that's why junk bonds give such a high yield. They're junk.
Correct. And so this is why you see firms like the people that have been in the space like for more than 40 years, like us, you won't see Ledn at the top of any of the rate charts. Like that's not really where we even want to be. We want to give the best risk-adjusted rate to our investors. And, we pride ourselves in the fact that we didn't lose a penny or a Satoshi during this turmoil. And it's because of our discipline. So that's a game we don't want to play. And I think that's a game that is going to be yielding increasingly less dividends for the firms that take that approach. Because again, a year ago, everybody was interested in the return on capital. Today, I think most people are interested in the return of capital. And I think that that's kind of what we've always focused on, is making sure we keep our clients' assets safe.
So let's maybe talk about Bitcoin mortgages. How do you guys facilitate that? Are there banking partners there? Are you doing the underwriting of the loan itself? How does it work?
So in Ontario, which is where the product is live, we are partnered with a mortgage broker called Butterscotch. And Ledn is still the lender, but the broker for the transaction is Butterscotch. And depending on the state or the province, you're going to find a different sort of flavor of that. Most mortgages are regulated on a state-by-state or province-by-province basis. So in most of the jurisdictions where this product will be available, again, the product's always going to be abidant to all of the sort of regulations and compliant with all of the pertaining bodies.
Well, luckily the mortgage industry is not very regulated, so you're lucky there.
Yeah, no, but there is oversight. And so we are working
I was just joking.
No, but there is oversight. And in Ontario, the product is live in Ontario. We're working through a few other provinces in US states, and we should have some announcements on that front, probably early Q1 of next year. The way the product works effectively is basically with our existing Bitcoin backed loan, you bring $1 million worth of Bitcoin and you can borrow $500,000 worth of cash. With the Bitcoin mortgage, you can put $1 million worth of Bitcoin collateral to purchase $1 million property. And so it's effectively,
1-to-1.
We take both the Bitcoin and the house as collateral for the loan. And that has other benefits. The other benefit is that it makes the collateral pool a lot less volatile. And so that allows us to give more generous timeframes for topping up, et cetera, for these loans. And it allows us to give clients a slightly better interest rate than with a standard Bitcoin-backed loan. And the genesis of that product, as with most of our products, was because clients were doing exactly that. They were coming in with these massive loans to go buy a house. Then they went to get a mortgage at the bank. Bank said, can't lend you money for this house. And so Ledn, and then they came back to Ledn and they said, hey, Ledn, can you take the house as collateral?
This happened to a friend of mine very recently. He liquidated, let's say, $300,000 of USDC, moved it into his bank. And it wasn't like he went to the bank the next day. He went through the house search process, and ultimately during the underwriting process, they denied him because of source of funds was crypto. Right. And he had the money, but it's tainted, right? The bank views it as tainted to a degree, so they won't make the loan out.
And to be honest with you, the bank's short-sightedness, not just on mortgages, but on services for digital asset holders, it's what's created the opportunity for companies like ourselves to exist. And so, I don't think it's right that a Bitcoin person isn't able to get, the same kind of treatment than a normal traditional finance person. But within that, we see opportunity. And that's effectively what we do here. Like, we give you the financial services that you wish you had. In many cases, you wish that they were provided by your existing financial provider, but they just won't. And we want to be a better home for your Bitcoin and your digital assets. This is the place where you can have access to a savings account. You can access a loan. You can get a mortgage. And soon we'll continue to work on products that our products are very much geared to letting people use their digital assets for their real day-to-day life, like creating a bridge between your digital wealth and your real life experience.
Understood. Yeah, if I, have my eyes set on a reasonable sized house in Ontario, I'll let you know.
There's a beautiful Muskoka region with the lakes and everything.
I'll have to check it out, although it's almost a jinx to hop on Zillow given these market conditions. The lever is going very quickly to the left, so to speak. So what's on the horizon for the firm? What should we expect in the coming months?
So there's a lot that you're going to hear from Ledn in the coming quarter. I can touch on a few things. So because of how we've navigated recent circumstances or recent events, and we didn't lose a Satoshi or a penny. Last year, we raised over $100 million, over 3 rounds, and we have the majority of that cash. Because of that, we're in a very strong position, I would say privileged position, to explore acquisition opportunities and ways to continue advancing our goals and the things that we want to get accomplished. You will probably see the announcement once this podcast goes live, but we
can save it. So just let it all out.
Yeah. So we recently announced that we've reached an agreement to acquire Arch Novum Investments. Arch Novum Investments is a regulated Canadian digital asset investment manager. This acquisition will allow us to offer digital asset investment products to our accredited investor base, both in Canada and globally. We're expecting to close the transaction on the fourth quarter, and it is subject to regulatory approval. But this is something that we're very, very excited about. It's going to greatly accelerate our efforts from a regulatory front and our posture. And that is going to make us the first digital asset lender that can offer registered yield product funds effectively to our accredited clients. And it will also unlock a whole new suite of accredited investor products that we're very excited about. And they're going to come out pretty imminently. But if anybody has any questions in the meantime, they can ping our team, and we're happy to kind of let you know what's coming down the pipes. So that's one. And we continue to look at other acquisition opportunities. I can't really comment on the others at the moment. The other thing that we're doing is, we are going to be doing a rebrand to effectively now,
Are you changing the name?
No. The name remains. We're just going to change the look. Yeah. So the original brand that you see today on our website is 4 years old. It's the brand that, we started out when we were 6 guys in a small office. Today we're over 100 people with clients in over 130 countries. And we believe that this new look really kind of embodies the next stage of our growth and something that we're very proud of. Those are like the two of the main things. And of course, the launch of the private wealth suite for accredited investors was going to follow very shortly after the acquisition is announced. That's what's on the pipes for Q4 and a couple of other announcements. So maybe I can come back once they're out in public and share a bit more about them. But that's the two things that I'm most excited about right now.
So you're going to have a sort of like Chase private bank, but for crypto.
Effectively, we acknowledge that there are certain sets of clients that have, different needs that aren't necessarily met by some of the products that are existing on the platform today. And so this new suite of products caters more to those needs. And we see those as very symbiotic for the overall business because half of our loans, over 50% of our originations, we've originated over $500 million since inception, and half of those loans have gone to Latin America. And what we find, and this is an interesting trend, I'm not sure if you're aware of it or not, Frank, but like when we launched these loans, the interest rate for Bitcoin-backed loans was 18%. 4 years ago. Today, that rate is sub 10%. And I believe in the future where borrowing against your Bitcoin will be cheaper than borrowing against US real estate. And I say this because I really do believe it, and there's many reasons for it. One is it can be liquidated in real time. It can be liquidated on a fractional basis. And it trades 24/7. And it has much, much lower closing costs, foreclosure costs. It doesn't exist. And the other piece is that over time, if and when Bitcoin continues to become a reserve asset, people will use their Bitcoin to access single-digit financing options. And this will be done not just by Americans. This will be done by everyone all over the world. And so that is a future that I believe is very, very bright for Bitcoin-backed loans. And that's why we want to be the leader in this industry.
The future looks bright, I guess.
Right now, there's a lot of choppy things in the near-term horizon, and the Fed is just on a crusade to make everyone unhappy.
Yeah.
But things will turn.
This too shall pass. So what does that look like in terms of how it might be impacting client activity or behavior? Have you noticed any changes this quarter relative to maybe a year ago?
In terms of like how people have been impacted by the higher interest rates?
Yeah. Are folks opening up accounts less? Are they borrowing, or maybe they're borrowing more because they need money? What does it look like in terms of their behavior?
Yeah. So what I typically think happens when we go through these sort of boom and bust price cycles is if you want to paint a picture and you think, okay, on a base case, there's a number of Bitcoin core users that are in the industry and that are there and they are just not going anywhere. It's part of their life. But there's also like the tourists, people that are curious, they are interested, they want to come in and buy it and they want to become a part of the movement. I think in the run up, you have a huge flock of new clients and, a lot of these are tourists. Some of these tourists become residents, if you would, and kind of stay. But more so than not, when market rolls over, all the tourists go away, right? And you get back to this sort of steady state of your residence. And, at Ledn, we have been catering to, Bitcoiners and holders of USDC for a very long time. And we do have a pretty strong base of recurring business and recurring clients that really they're just very sticky. They don't really go anywhere. But whenever the spotlight comes on, whenever Elon Musk does a tweet, whenever Michael Saylor does a big purchase, you get these sort of big rushes of, call it retail tourists that, again, the rate at which they become residents is slow. But the reality is that base of residents keeps making higher highs or higher lows, if you would, and it keeps this crescendo. So, there's knee-jerk bumps high and low, but the trend is pretty clear, I would say.
Understood. Well, sir, thank you so much for coming on the show. This flew by. This was a very quick 45 minutes, it felt like.
Definitely.
I appreciate the comparison to being the odd lots of crypto. I say that they're the scoop of U.S. equities, but be that as it may, it is a compliment nonetheless. Joe actually mentioned me. I feel like I mention him all the time on my show. I've actually I probably have this cut out because I talk about him too much. I don't want him to think I'm like obsessed, but no, we are friends. So there's no.
That's great. Listen,
that is my favorite podcast. I don't really listen to any other besides that. And what's funny is my girlfriend hates it. I think I've told Joe before because it's like it's not like, oh, like I don't like it. She abhors listening to it. And I think like the reason why she doesn't like it is the reason all fans of Odd Lots like Odd Lots is the sort of the really esoteric, weird episodes where they talk about, how nail supply chain and those weird topics just is not interesting to her at all, or bond markets and the like. But she does like crypto. She likes crypto, but I guess she doesn't like markets. She finds them depressing.
That's really funny. And I actually, for a while there, I made a tweet comment on Joe because they were putting out like 5 or 6 crypto podcasts in a row. And I was just, for a second there, I was like, did Odd Lots become a crypto podcast? But no, it didn't. You guys are still the best ones in crypto. So
Tracy really doesn't like crypto. I think she'd be rubbed if they made.
Tell us how you really feel.
She doesn't. I mean, I think she has all as much as said that, but I mean, there's reasons not to like crypto. I mean, some of the characters are bizarre.
And some people can be just flat out rude too. Sometimes.
Yeah, not everyone's as nice as me. Where can our listeners learn more about you, what you're working on? And then they'll hit the site and it'll be new, potentially.
Yeah, you're going to check out a brand new site. It's ledn.io, LEDN.io. We are on Twitter at Hodl with Ledn. I'm on Twitter at Cryptonomist with an A at the end because I'm Spanish, Cryptonomista.
That's
and
right,
I write the weekly blogs for Ledn. You don't have to be a client to sign up for it. You can just get it if you want to, but it's basically a weekly market update, and it's a Bitcoin economic calendar. So events and data and how it could impact Bitcoin for the week ahead.
Well, thank you so much for stopping by the Scoop to chat with us today.
Always a pleasure, Frank.
Once again, we've been joined by our guest, Mauricio, co-founder and CSO at Ledn. Thank you so much.
Thank you.
The Scoop will be back with you once again with another great guest. Have an awesome day. Looking for more great insights from The Block? Check out The Block Research, the premier platform for research content on crypto markets and the digital asset industry. The Block Research membership includes cutting-edge reports, webinars, company maps, and more, available via our dedicated research portal. Visit theblockresearch.com to find out how to join today, or contact a member of our sales team at sales@theblockcrypto.com and let them know that Frank sent you.